All right. Welcome, everybody, to Nexus's monthly webinar. We always like to start this off with giving a little update on who we are and what we're doing on what we're seeing out in the multifamily market. My name is Adam Riddle with Nexus Commercial Realty, one of the co-founders and principals here. We are an apartment and land brokerage company based in Denver with offices in Colorado Springs as well. And we focus exclusively on the multifamily sector and now recently expanded to cover surrounding states of Colorado as well. Just a quick market update. We are seeing a robust amount of activity. We've closed or set to close 15 deals in the month of October, which is our biggest month yet in closings of our company. So very active month, and we currently have 46 deals in our contract. We are seeing a ton of new capital to the market. I think that's something that everybody's talking about pretty regularly right now is who's buying today. And I'd say, I think out of 46, 20 to 25 of those are first-time buyers to Colorado. Not first-time buyers in general, just we closed a deal with a group out of Canada that owns a couple thousand units there. We're closing a deal with a group out of South America in the next week or so. So a lot of new capital looking at Denver. So seeing a lot of interesting market transactions. As far as occupancy and rent growth, they are stable. We actually saw a little bit of rent growth in some submarkets this past quarter. I think everybody obviously is still kind of sitting and waiting to see what happens this winter, especially as Colorado, for one, is trending with higher cases for COVID right now and getting more restrictions being put into place. So with that, obviously we still have a very active market and things that we're seeing and driving that. I mean, debt is still at all-time lows, and we still feel like people think the apartment sector out of all sectors in commercial real estate is a safe long-term place to put money. And we'll talk to more with our guest about kind of what his thoughts are on our sector of the business here shortly. With that, I am very grateful and honored to have somebody I've known for a long time, Travis Steffens, President and CEO of R Investments, based out of Denver, Colorado as well. R Investments is a vertically integrated real estate company, and his company was recently recognized by President Trump at an Opportunity Zone conference in Charlotte, and is being used as one of the poster childs for investing in opportunity zones around the country. They also actually had an employee recognize that President Trump's State of the Union address in February for turning his life around through some of the programs that we'll go over today that R Investments offers. Travis and I have known each other for a long time, and just grateful to have you on the show, and want to let you give yourself a little intro.
Thanks, Adam. It's an honor to be on the show, and as you said, known you guys for a long time, and we wouldn't have got our start without you. So a lot of gratitude for you and all that you've done in our world. Yes, we are a national vertically integrated real estate investment company. We started in Denver in 2006. We flipped about 350 to 400 homes between 2006 and 2010, which is when I met Mr. Adam here around 2010. We started buying duplexes, then moved into fiveplexes, then jumped up to 20 units, then jumped up to 40 units, then jumped up to 200 units, and then just started cleaning up the bottom of Denver from 2011 to 2014. Bought several thousand units in Denver between that time, and then started moving out of state when the market started rising. I had never been through a market fall and a market rebound. So when the prices started getting crazy, it scared me out of town. So I left and followed the wave back down into Phoenix, Arizona. Then we moved into St. Louis, Missouri, then into Kentucky, then into Indianapolis, then into Nashville, then into Ohio, and just started scattering across the country, Florida. And we just recently closed another Opportunity Zone deal in Charlotte, North Carolina, and got that up and running. I was just there for a training. We do a training at each property before we launch the construction. So I was just there and be headed home today actually from that. So still moving across the country, still going strong, and excited about the opportunities that are presenting themselves.
Yeah. So for those that didn't grasp that, Travis's trajectory from starting in the multifamily business after his single family business is probably the quickest trajectory of anybody I've ever come across in 13 years in this business. And Travis is a very goal driven and dynamic person and has made that happen. And I still remember the first time we met, Forest Room 5, the table we sat at, and the whole 9 yards, and you saying, "Hey, this is what I want to do. Can you help me get started?" So great to see where it's come and how far you've been able to go, because it's impressive. I can only watch from afar these days as you got out of the Denver market a while ago, but it's always good to get caught up and see what you're doing these days. So talk a little bit about that. Why did you first get into real estate, but then why did you get out of the fix and flip business and want to move more into the multifamily sector?
Well, we were flipping, we probably had about 25 to 30 houses in construction at any given time. And when the first time homebuyer tax credits hit, it was like rocket fuel to the whole program. We were, I'll never forget, I was married at the time and we were making so much money that Jessica says, "Is this legal?" And so it was amazing. And I foolishly thought that it was never going to end. And when it did end, it was like hitting a brick wall going 1,000 miles an hour. All the money that we had made, all the reserves we had put away, all went to start paying down the millions and millions of dollars worth of houses that we had sitting on the market with no one in them at a 12% burn rate on the capital. And so I decided that then and there that I would never invest in anything again that was not cash flowing. And that's when you and I talked that day and bought the deal on Paris. So then that started the ball rolling into assets that could service themselves regardless of the market. And I was more interested in cash flow then than getting back into the quick money. And so we still flipped quite a few apartment buildings, as you well know. You brought a ton to the table and sold a ton for us. And but in the last 3 years, we've decided to only buy and hold for the longer term. And so we've changed our model there. But getting into the apartment world was a more sustainable long-term effort for us because of the cash flow, but it also showed us that we could have a more long-term sustainable impact on the residents that live in these properties. As we started to purchase the properties, because we focus on C-class buildings, D-class buildings in the roughest areas of the country, it's part of our reputation. Conscious capitalism is going into the toughest areas of the country, taking down some of the toughest buildings that everyone else is to be honest, afraid of, and then coming in, cleaning it up, and then empowering the residents that are there. We're not fans of displacement, and we're not fans of gentrification outside of just natural organic gentrification. And so we saw multifamily real estate as a great way to love and care for the individuals that live there and raise the collective consciousness in that neighborhood. And so we really started putting a lot of effort into that, and it's led us to where we are today with pushing conscious capitalism across the country. And we use real estate as a vehicle to empower residents now and on a great scale. So
the conscious capitalism is a term that I've heard a lot following you recently, but obviously with everything that's going on in the world today, is a very hot topic. You know, that's not a word that was thrown around when you and I met in 2010. Talk about the evolution of kind of our investments and where that started coming into play. I know you've always bought that kind of C-class projects that needed work, and you wanted to. There was always the kind of not nonprofit, but there was always a sector to your business, but we weren't calling it something, but you always had that side of the business. When did it really shift to this, hey, we're going to put this out there that we're to our investors, to our lenders, to our strategic partners, that this is what we're focusing on, and this is all for a purpose?
So I would really say it started at Federal, that deal that you brought to us on Federal, that 40 units. And we went into that project that should have been condemned and shut down, even though it was slated to be torn down. And there was people living in conditions that were beyond unbelievable. And so
That's
when
still
we
the worst.
started,
That's still the worst property I've ever been into, by the way. Still to this day. You may have
I
been
would
in worse over your years since then, but that's still the worst one I've ever been into. Sorry, go ahead.
I would say it takes the cake. And for those of you on here that don't know what we're talking about, hazmat suits, there was mold stalactites hanging from the ceilings that literally had formed into a like a 6-inch stalactite. And all of the drywall was so molded and so rotten that it was falling off the walls wherever there wasn't stalactites hanging from the ceilings. It was pretty unbelievable. So the sellers of this property had told the banks that they would take the property off the bank's hands if the banks would pay them to do so. So it was that bad. But there were people living in one wing of the building in the lower units, and it was just unbelievable. So as I started seeing the the living conditions that some of these individuals were living in, and that homeostasis had set in on such a level that they were even unaware of how they were living, we wanted to empower these residents. So a lot of them being elderly, and a lot of them living in that building from the time it was built. So being built in the 60s and 70s, they had never moved, not once. They had accumulated a lifetime in that one unit. And although we wanted to give them a better living situation, we knew that raising their rent was not possible on their fixed income. So we started helping these individuals ourselves. And beautiful fair housing, one of the bloated parts of the government came along and said, uh, we can't do that, and if they catch us doing it again, we're going to be fined $100,000. So therefore, it started my first nonprofit. And when the first nonprofit launched, it was called Grasp, Gifting Rents and Serving People. And we started helping the elderly individuals in our properties that were struggling. That's where the conscious capitalism started coming in. And I was having visions of going into streets and cities that had boarded up buildings, building after building after building, and bringing them back to life, and empowering the residents that were there. And so, as we started moving across the country, necessity being the mother of all invention, we would go into these rough neighborhoods and we would hire subcontractors to do work for us. And because of the culture of these rough neighborhoods, the subcontractors would have the same mentality as the neighborhood. And so we couldn't get any quality out of the subs. So we just started our own construction company. And then when we needed protection in these neighborhoods, we would hire the local security companies, and the same thing would occur. There was security companies I was paying up to $25,000 a month for one property because there was so much crime in it right when we bought it, and we had to alleviate the crime, and nothing was happening. And so we just decided to build our own security company. And so um, in the construction company, I'm sorry, fell off there. In the construction company, when we would place an ad, this is the next big piece for us with the construction company. When we place an ad for a Craigslist worker, we would get 10 responses. We would tell all 10 people to show up. 2 people would show up. We'd hire both of those people, and the next day, one would show up, and then that day he would blow out because he wasn't okay with our systems and processes, because we're very systematized. And so we started to decide that we were going to hire homeless people for the construction company. And this is where President Trump has acknowledged us. And so we started going out underneath bridges and started going to the homeless houses in the area. We started picking up employees. We would put together units. We would house them. We house them. We give them the tools for the trade, and we train them. And we have a very strategic, militaristic sort of structure that we also built a software around that streamlined the renovation construction industry. And now we're 4 times faster than anyone in the country, and we use homeless individuals to do it. And so the conscious capitalism in our world was born from seeing an opportunity to make money and doing it through empowering other individuals through the vehicle of real estate, and watching the magic happen by doing well, by doing good, but doing good the right way. There's a lot of people out there that are doing well, thinking they're doing good, but they're not really helping long term. And it's actually doing more harm for a lot of these individuals than it is helping them. So
No, that's great.
that's how we coined so we did not coin the term conscious capitalism. That's a John Mackey term from Whole Foods. But we have our own definition of conscious capitalism, which is when you come in to do business in an area, everyone wins, whether it's voluntary or involuntary that they're involved.
That's great. Um, at one point, weren't you the largest Home Depot client at one point?
Yes. Last year, I think we were the second largest Home Depot client in the US. There is one group that's a conglomerate that's quite a bit larger than us at the moment, but we do anticipate surpassing them next year, and we will anticipate being the largest Home Depot client in the world.
Awesome. That's an incredible stat that probably not a lot of people know. So let's get into, you've been recognized, obviously, nationally, a lot of press around opportunity zones. And that's obviously something that's come up in the last 3 years, and you were buying projects way before opportunity zones happened. So talk about why opportunity zones. Are you just chasing opportunity zones these days? And why, when that rolled out a couple of years ago, why you saw an opportunity with that particular projects?
So the cool part is we've been working in opportunity zone districts since you and I bought that first property in Paris, basically,
Mhm.
and on Paris Street in Denver. I don't want people to think we were working in Paris. So um, it wasn't something new for us to work in these areas. And what excited me about the bill was the 10-year enactment. So when you put focus long term on an investment, the opportunity for that investment to grow on a conscious capitalist basis, because you're paying attention to all the little pieces, is highly probable. We see people come in and throw lipstick on a pig all the time and flip it for short buck and they're out. And they really, in my opinion, don't really care what impact they have on the neighborhood. They're just in there to make money. And so with opportunity zones, you really don't get a bang for the buck without staying in the deal for 10 years. Now, anybody who's on that understands that there has not been any extensions yet on the opportunity zone until Trump gets reelected is if the property wasn't necessarily purchased in 2016, the first part of 2017, your burn rate is already shrank. So we'd have to talk about that later, but the opportunities that came through that 10-year enactment and being able to completely eliminate your gains was super powerful. And we saw a lot of money pouring into the opportunity zone areas, but they were unaware of the challenges they were going to face with these properties that they were purchasing. A lot of people just brought money in and had no idea how to deal with C-class residents, no idea how to deal with whole neighborhood turnarounds and those types of things. And it was more targeted, in my opinion, for new builds, but there's still a lot of opportunity to, and we've even learned how to come in, purchase a property, start an opportunity zone fund just for the rehab alone and get the gains treatment on the rehab money. There was a portion of opportunity zone bill where you would have to come in and put 100% of the purchase price amount within it in X amount of time. So if you bought a $5 million building, you needed to put 5 million in rehab into it to make it a qualified opportunity zone property. Well, we've have since engaged the actual White House counsel that has written the bill, and they've shown us how you can actually do it with just your rehab funds to defer the gains that you roll into the rehab funds and then eliminate those gains in the future. So there's quite a few really incredible loopholes that anyone who emails you that wants our counsel's information, we'd be happy to pass it on. But we started to see those benefits all over the country. As you may well know, there's just under 9,000 opportunity zones in the US. And as long as Trump gets reelected, we're going to most likely see an extension on that and see another good 4 years of people pouring into OZs. We also have 2 opportunity zone businesses. I started a tech company because we needed to build a software to streamline the renovation construction industry and be able to do it with unskilled workforce. So that's in an OZ in New Orleans. And then we started our construction business in an OZ. So we have 2 QOZBs and 5 properties in O-zones.
Awesome. I'm going to get into both of those things you just talked about in a second, but first, affordable housing is in every major city at this point an issue. Everybody wants to solve it. Nobody knows how to do it. You can't build it cheap enough to be affordable. Obviously, there's tax credit programs and these other programs that are trying to move along as fast as they can and try to build affordable housing. But we both work in naturally what is kind of affordable housing. It's not coined affordable housing, or there's not tax credits on it, but it's older product and it's C-class product, so it's naturally more affordable than anything else. You have now started buying some non-traditional apartment assets that you are turning into apartments. Talk about what drew you guys to that to start with, and why you think that's a successful thing for conscientious capitalism, but also for trying to help solve the affordable housing crisis.
Well, affordable housing crisis is a real deal, and you're absolutely right. Currently, you can't build unless you get huge government funding and get the tax credits in the right manner. And so we've never taken any help at this point yet, and don't take tax credits just for the loopholes you have to jump through. So we continue to find deals across the country that are heavily distressed, boarded up, empty. I mean, we're buying a deal in West Palm Beach County for $32,000 a door, and it's 3s and 2s, and a lake in the middle and everything else. It just happens to be boarded up. And so there's always deals out there. You just have to search hard enough, and you have to have enough bootstrapping capability to turn them around. But one of our big focuses right now is buying old hotels that have larger units in them. We try to focus on the 415 to 450 unit per square foot range. And we're buying hotels that are on the small side of 150 units, on the larger side up to 250 units. We're picking them up for $15,000 to $50,000 a unit, depending on where they're at. And then we're coming in and permitting them, planning them out, and then putting kitchens in them. They're micro kitchens is what we call them, but they're still a full kitchen. And then we're running them with the hotel. We keep the hotel zoning so that we can keep the hotel accountability. So if Adam comes in and you've been evicted from an apartment building, I can't put you in one of my apartment buildings because you have an eviction on your credit, and fair housing won't let us do that. But I can put you in my hotel, run it like an apartment building, and then I can transfer you after 12 months into one of my apartment buildings, because I can run that program under fair housing guidelines, and the apartment building can be in compliance with fair housing, and we can take Adam, help you get back on your feet in the hotel. You would sign up with our nonprofit, Our Empowerment. We would help you with budget classes. We'd help you with brain training, cognitive skills, resume classes, all these things, just to make sure that you can get back on your feet within that 1-year time period. And the key is that you're paying us rent every day until you show yourself faithful. Then you pay a couple times a week, then you back off to once a week, then you back off to twice a month, then you back off to once a month. That's when we transfer you into an apartment building. So we break homeostasis slow because we understand how humans work. And so they are very profitable little hotels. I had one in Denver that you know of. It was 95 units, and we were netting after debt service $80,000 a month on average, and we paid $4 million for the building. So when you do the math on that, it's unbelievable. I've had 800 unit apartment buildings that barely made double that, and this was a little 95 unit building. So we found a lot of power in that, and the accountability power of what we call instant feedback. So if Adam goes out for the day and decides not to manage his money well, and he comes home and doesn't pay his rent, he finds a boot on his door or the key disabled, and it's instant feedback that, look, you got to be responsible or you're not going to have housing. And that is part of conscious capitalism, is loving someone enough to give them instant feedback in a way that causes them to desire to change. And we don't just carelessly kick them out. We allow them to get back on their feet and get back going again, but it's great accountability.
Yeah, no, that's awesome. So obviously what you did even when you were here and renovating apartment projects and bringing your construction background from doing all your fix and flipping into the multifamily world, which, I remember we were first doing our deals, I said, you automatically have a leg up if you've got contractors, construction, you can source cheaper materials. That's going to help you as an apartment investor. And obviously I think it's helped you tremendously. Talk a little bit about lenders and equity for the things that you're doing. It's a little outside the box, buying a hotel and running it, because I went to the one obviously out in Aurora that you had, and the model is a little more manpower intensive, a little more management intensive. What is equity saying to those types of things, and how are you getting these deals financed?
It's a great question, because I don't want to mislead people that what we're doing is easy. It's not easy, or everybody would be doing it. But it's fruitful, and you need to understand your clients, which are your residents. In my company, we don't call them tenants; we call them resident clients, because without those clients, we wouldn't have a business. And we're selling a product to these clients, which is a place to stay and service that's, we like to say, as good as Four Seasons. So when it comes to the financing piece of it, we obviously have a track record that supports us and follows us. The equity for these deals has not been the challenging part because of our track record. The debt has, though. And so with these hotels, there are very, very few banks, definitely no institutional banks that will loan on them, especially if they're not flagged. And even if they are flagged, they'll only loan 60 to 65% LTV. And so what we did is we found an extremely high net worth individual that was willing to carry the paper, the debt on the hotels at 6 to 8%, and we just pay him on an ongoing monthly basis. Now, a lot of people are probably thinking, "Whoa, 6 to 8%," but these deals are kicking off so much cash that you can pay 6 to 8% and still be operating on a 12, 13 cap.
And then, so once you've done your stabilization and turnover of the project, are you going to refinance that? Because I know you guys are going to be long-term holders on a lot of these projects at this point. Are you going to refinance that into more traditional lender, or are you sticking with that high net worth individual?
One of our goals now is to build a big fund and actually start a debt program to be able to do debt on these projects at 4.5 to 5%.
Yeah.
So that's one of our next goals, because we have not found that lender that's willing to bite these off, even though they're incredible. So having a T12 or longer is a big deal.
Right.
Running them like an apartment building is a big deal. And most people would go, "Well, why don't you just zone them apartments?" The reason why we don't zone them apartments, and look, 99% of the cities would be happy to rezone them into apartments. We just keep them hotels for the simple fact of holding people accountable. And we have a 99 point something percent economic rate at every property, regardless of the neighborhood, because if they don't pay, the door gets booted.
Yeah. Have you guys, you are one of the best people at sourcing projects, and I know that's not just you, that's your team, but have you guys in trying to find different avenues to invest, like you've gone into the hotels, Have you looked at anything else that you feel like is interesting, whether it's an old warehouse or an office building or anything like that, where you feel like you can come in and kind of do your project and have an affordable housing and component to it, and in certain neighborhoods? Have you looked at any of those types of projects?
Yes, we have. So we were honored to be able to build the first micro units in Ohio. So we built them in Cincinnati, and we had a commercial floor in one of our buildings that we went ahead and zoned residential. And I vaguely recall it being about 3,000 square feet. This just blank floor was just concrete, top and bottom. Um, and so we came in and we put in micro units, and we were able to fit 20 micro units in this space. And then we built a big community kitchen. And so now those micro units, we furnish them as well. So they rent between 950 and 1150 a month. So when you think about that, they're only 250 square feet, and they're renting for that dollar amount. So the price per square foot is huge. And we have this giant gourmet kitchen in the corner of the floor, that's got two giant double-sided refrigerators. It's got four stoves, four dishwashers, four microwaves, and a lot of counter space, wine coolers, stuff like that. So people can come in and enjoy cooking because of the environment. They can go back to their room. They can communally eat in certain areas of that, and then we've got a fitness center and all this other stuff there as well. So yes, the conversion of commercial into multifamily, I think, is going to be a massive opportunity with the crash of commercial real estate that's coming. I believe we're staring down the barrel of the largest commercial real estate crash the country will have ever seen. And the cool part about that is that commercial is historically located in some of the best parts of the cities. So we are primed and ready to go to buy prime real estate in areas where it's going to go for pennies on the dollar, and then convert it to multifamily as it comes to market.
Awesome. Yeah, I know we talked about that a little bit yesterday. I agree with that. Let's get into some of your other lines of business or work, and you've mentioned a few of them, but talk to us about our academy and what you guys are doing with that. I know that's one of the opportunities on businesses that you have, and something that you've gotten a lot of press on, national press on. So can you talk to people about, why, a little recap on why you did it, and I think you're trying to expand the model as well. Just dive into that for us for a little bit.
Yeah. So as we started to hire the homeless individuals at the properties, we were training them on the fly. So we bring them in, we house them, as we said, we give them the tools of the trade, we train them, and we do it on a very militant structure. The challenge that I had with that is that we didn't give them the mind body spirit piece, and there's four elements that I think that an individual needs to have long-term success: mind, body, spirit, and workforce alignment. Not balance, just I like to align those things. It's too hard to keep something on balance point. So we purchased an 85,000 square foot warehouse in Cincinnati on 4 acres, and we built a curriculum around mind, body, spirit. And so we would take Adam off the street. You would come into the organization. We have it specifically set up to where when you walk in the front door, you sign up, you move around a wall, and the past ceases to exist. And I'm a biology geek with neuroplasticity and epigenetics, and we built our entire platform, our entire program around those two things. And it's old neural pathways that are no longer used. They disconnect, they no longer fire and wire together. New neural pathways for a new life, falling in love with a new self, start to fire and wire, and you can become a new person through epigenetics and neuroplasticity. And so they move around the wall. They're greeted and go to the naturopath doctor. So Modern Med out of LA is a leading naturopath doctor in the US right now, and she's putting a clinic in every one of the academies. And so you'll get your blood drawn, hair samples, all of your health samples, and you'll have an entire health plan built for you. And then you'll go on board with Korean Academy for Taekwondo, 3-time Olympic champion, and he's putting a dojo in each one of the academies as well for the mind body connection. And then Samurai Success does the process coaching with our software that we built to streamline the renovation construction industry. And so they'll learn how to use the software and learn how to use technology. So we call that our new collar workforce. And then they will also get a QuickBooks account set up for personal QuickBooks. And then there's going to be an on-site Whole Foods grocery store that they'll learn how to shop at actual Whole Foods prices. And then there's going to be there's professional chefs that are going to come in and teach them on a daily basis how to cook, so that they can learn how to cook on or on a budget and actually eat organic foods that are fit for their body and their health, on a long-term sustainable basis. And they'll learn how to keep their own books. They'll learn how to pay their rent. So they'll have barracks on site where each one of them gets their own micro unit, and they'll actually be paying rent. So it's all monopoly money, but it's flowing through their hands, and they're learning how to utilize all that capital. They'll also have breathwork classes. They'll also have meditation classes, because we'll be tapping into their autonomic nervous systems to help them reprogram. And when they're not doing the mind, body, spirit piece, then, oh, there's fitness as well. Final Move Fitness out of Denver is doing the fitness in every property. So when they're not doing the mind, body, spirit piece, that's for 6 hours a day. The other 8 hours a day, these are long days, they'll be building a tiny home from the ground up. So Adam would get a bay in the warehouse, and we warehouse all of our materials. So every project we buy 100% of the materials up front to eliminate the variable of a material flow issue. Everything gets loaded into the software and stocked in the warehouse. And so we'll have a warehouse there that's an exact mock-up of how it is out in the field. And they'll be understanding the flow of materials. They'll be understanding inventory control. They'll be understanding how to use the software. And when Adam shows up at his unit every day, his bay, your materials for that trade that you're going to be learning that day will be sitting on the floor, because that's how we do it in the real world in the apartment buildings. Then you'll pick up your tools, you'll get to work, and you'll have a trainer that will be training with you throughout that day to make sure that you understand your trade on a comprehensive level. And then at the end of the day, you go to your barracks and you go to sleep, you get up, you repeat it again. So it's a 90-day boot camp. They can't leave once they've signed up. And once you graduate, you're in a good state of mind, a good state of health, a good state of spirit, and you've built a tiny home from the ground up. Now, this is where the conscious capitalism piece comes in. We have spent a tremendous amount of money helping you become your grandest version of the greatest vision that you could hold for yourself. And we're guaranteeing you a job. So we deploy you to one of our job sites across the country to work in one of the trades that you learned at the academy. And your tiny home goes to an opportunity zone in that city. And currently, Cincinnati is just giving us properties at $1 a piece, just to have a transfer of tax bill, and they're even deferring the taxes on them for us to put these tiny homes up and build tiny home villages. So it's called Our Tiny Villages, and then they rent for about $650 to $750 a month. Our basis into them is $50,000. A lot of people might think that that's pretty high, but it only costs us $22,000 to $23,000 to build a unit, but it costs us another $25,000, $26,000 to put that cadet through school. And so we're investing $50,000 into a micro unit, but it's renting for $650 to $750 a month. So those numbers work all day long. And it's a brand new unit. It's like an A-class building at that price. So when you asked about affordable housing, we are now supplying affordable housing, and we'll be supplying it on a grand scale at that price, because it's only costing us $50,000 a unit to build them out. And if you did it so 50,000 units, build them out. So we're excited about that, and that academy should be launching in the next 12 to 14 months. And then the goal is to build one in every major city across the country. We have incredible support from Dr. Ben Carson and from a lot of White House representatives, Reverend Tony Loudon, his president's reverend and president, and all that stuff. So a lot of support there, and a lot of support from people across the country, because homelessness, and these will be homeless individuals, they'll be coming off the street straight in. So we'll take 200 people off the streets a year, and we'll be building 120 tiny homes a year per academy.
Yeah, no, that's an incredible feat, and I know something you're very passionate about. And it's crazy to see how you've taken apartment investing and obviously, needing to make money and capital, and turned it into a passion that's solving a lot of issues in our country. So kudos to you. So last thing that I have as a topic, and then I have kind of just 5 or 6 just kind of big questions I want to ask you. Your technology that you guys use, I think that's, and you keep referencing it. They learn how to use the technology. It's one of the more impressive things I've ever seen. I've been into your office and looked at all these screens and all these projects going on around the country. You know, talk to me about, why you had to come up with that, and why it continues to make you guys more efficient than anybody else in the space.
So renovation construction industry has been the biggest shit show that I've seen in my life forever. Anybody on this phone that renovates buildings understands how challenging it is to find a organized individual who operates on a system and a process that can repeat success. And the age old question of you never know what's behind the walls,